So everybody, I'm really excited about today's webinar. My name is Dave Price. I'm the Director of Sales here at SVN Rock Advisors, and I'm your host for today's webinar, Unleashing U.S. Opportunities, Commercial Real Estate Opportunities for Canadian Investors. So this is not our first event. We had a great success back in October, and we made some great connections. So what we're going to do today is we are going to introduce a couple of developers that are from our friends down south, and we're going to introduce some properties to you or some opportunities for you to potentially invest in. So enough about me. Let's talk about a little bit of administration work. So SVN Rock Advisors, we put on a lot of webinars and events, and we're educators and coaches. And so we're next week, we're putting on an event called Apartment Developer and Affordable Housing Conference on November 28th in advance of the Toronto Real Estate Forum. We've got a January 11th event for motivating generations 2 and 3 into real estate business, right? Intergenerational family real estate. And then we've got a really exciting event coming up in January. This is where we really get into coaching and training and teaching. It's called Apartment Development Masterclass. It's 11 sessions. It's our winter session. So it starts on January 17th, and we're going to get into all aspects of teaching and training you and your staff all the ins and outs about building the best apartment for a specific website. So it's all about rental apartments and the do's, don'ts, and lots of expert speakers and case examples of how to do it right and the mistakes to avoid. And that includes the latest legislation and incentives that are coming out by the government to help developers get their projects moving forward. And then, of course, it's our series that we're on right now about unleashing U.S. real estate opportunities. We're going to take a pause in December. It's the Christmas season, but we're going to be back at it in January, presenting 2 new spotlight features in January. So stay tuned for that. And next, what I want to do also is to let you know, to protect the privacy and security of everybody on this, that we're in webinar mode. So you can't see each other, but I want to let you know this is an interactive session. Sam Ray and Justin Moffat are going to be talking to you about some incredible opportunities down in the United States. If you have questions about their properties, questions about what they're talking about, put them in the Q&A. You can see the circle there. It's at the bottom of your screen. And when the gentlemen are finished with their presentations, we'll go through the questions. And if there's anything that we can't get through on the webinar, we'll just answer those after the fact. So we'll try to get everything packed into this 1 hour, and we'll try to keep things moving. So again, we're in webinar mode. We are recording this session. So you can always go to our website at svnrock.ca at Unleashing U.S. Real Estate. You'll see that on the website. You can watch the past recordings, and you'll be able to rewatch and watch the one that we're recording today. So the agenda for today. So we're going to introduce the strategic real estate cycle and how we go about what we do, right? Then we're going to present 2 feature spotlights for U.S. developers, and they're going to talk to you about the potential opportunities coming up. And then we'll talk about next steps. So I'm going to introduce to you very quickly our esteemed guests here today. If you were with us on the last webinar back in October, you're going to remember Larry Browning. He's the president of the SEC, which is the Society of Exchange Counselors. He's also the owner and president of Evergreen Investment Corp. We've got Sam Ray. He's a partner and investment specialist from R.J. Bowden Companies. He's going to talk to you about some of their past successes and what they've got coming up. And then we've got Justin Moffat. He's the CEO and owner of Old Town Companies. And again, Justin's got some really exciting stuff coming up, and he's going to show you some of his past successes. So strategic real estate deals, right? So this is a process that we've put together, and we've got this forum where we're connecting individuals that are developers, that are vetted, good quality processes in place, vetted individuals, vetted projects. And, what we're doing is we are giving you an opportunity to be introduced to them. So we're connectors. Now, how we do this, right? We can't be everywhere at the same time for everybody in our network. SVN Rock Advisors is a collaborative organization. We cover all of Canada, but we leverage our relationships down in the U.S. So SVN is a huge network down in the U.S., and you can see all those pins of our different affiliate offices all over the country. Now, we also tap into that network as well as the SEC, which Larry Browning is a member of. These are people that know and understand the geographies, the developers within it, and the projects within. So SVN Rock has always been about identifying gaps and networking. So we're really excited about what we've done so far. Our relationships with the SEC has introduced us to Larry Browning, which has helped us to identify what we feel is a very significant gap down in the Indiana and Kentucky geographies within the U.S. And we wouldn't know anything about them if it wasn't for our collaboration network efforts and our networking with people like Larry Browning. So this is all about that joint efforts together to make things happen. So again, this is a confidential conversation, right? Nobody can see each other. If you have questions, please use the chat at the bottom of the screen. It'll be anonymous, and we will present the questions to Sam and Justin as they come up. And anything that we don't cover, we'll take care of after the webinar is over. All right, so now we're going to get into our feature spotlight, our first. And so before we do that, I just want to explain to everybody how we go about this so you understand the value that we're bringing here today. Step number one is that we look for opportunities. I had mentioned the gaps, right? So we look at the market, the opportunity. We leverage our network of boots on the ground, feet on the ground, like Larry Browning in the Indianapolis, Indiana, that corridor down to Louisville. So we go see them. We put eyes to it. We have conversations. We get introduced, right? So we've met Sam Ray. We've met Justin Moffat, who you're going to meet today, and we validate those opportunities. That's step two. So we ourselves vet the market, vet the developers, and we hand select the opportunities that we're going to present to you based on their merits. And it's not just our opinion. It's the opinion of the boots on the ground. Larry Browning has known these individuals for many, many years. He's worked with them for a very long time, and we've vetted out these opportunities. Now, here's where we are today. This is the spotlight. So step number 3 is giving our audience a preview of these pre-vetted opportunities with these pre-vetted developers. So, we're going to get into it today. So I'm going to introduce now Larry Browning, who, as I mentioned, is the owner of Evergreen Investment Corporation. And Larry's going to walk us through the strengths of the market down in Indiana, down into Louisville, Kentucky, and he's going to introduce himself as well as Sam Ray. So Larry, over to you.
Thank you, David. I appreciate it. It's great being with you today. We'd mentioned this on the last webinar, but you've identified properly that there is a gap in the market, and we've seen a gap in our area for quite some time. Bottom line is we have a shortage of housing here. And you may have read in some of the Wall Street Journal and others that they're seeing some overbuilding in areas. They're seeing some areas where rents are finally dropping and that they're seeing some vacancy occur. That's not the case in Indiana and Kentucky. We've actually seen a major job growth around here. And you can see from this slide some of the advantages of Indiana. First and foremost, it's a great government state. We have great government, and we have actually had a surplus for a number of years here in Indiana. And that surplus actually was returned to some of us taxpayers this past year. We received checks from our state. Secondly, we're a distribution hub. We're closest to most of the populations in the U.S., and Indianapolis, considered the crossroads of America. We have 5 interstates intersecting right in Indianapolis, and so we have a great transportation network. We have the second largest FedEx hub in the world, and Louisville has the largest UPS hub. And so have great advantages in Indiana and Louisville, Kentucky, with great transportation and great government, and we're close to most of the population in the U.S. Also, on the government side, we're seeing in the poor government states jobs fleeing there, and those jobs are actually coming to Indiana and Kentucky. We're seeing huge job growth. And that's where we're seeing the gap occur. As this job growth occurs, we're seeing a tremendous need for housing in Indiana and in Louisville and Kentucky overall. So the good government has resulted in good new jobs coming, new industries coming. They're fleeing some of the poor government states. And we also have access to land that's reasonable. Our costs are reasonable. Our employee costs are reasonable. So we're seeing great job growth. And as David mentioned, him and Rod and Derek have come down and looked, and they saw warehouse after warehouse after warehouse down the interstate as they saw some of the places where these new jobs are created and coming. So Indiana is not a sleepy town. On the contrary, we are home to professional teams. We also are considered the amateur sports capital of the world, and we're considered the racing capital of the world. So we have a lot going for us, and we have a good, strong educational system. We have Purdue University, Indiana University, Notre Dame, Indiana State, Butler. We have Rose-Hulman, a number of great educational institutions around our state that are training people to take these new jobs that are being created. So we feel like Indiana and Kentucky is where a gap occurred, and we're still seeing increase in rents, and we're seeing still a major shortage of housing units. Last year, believe it or not, Indianapolis was the highest rent growth in the nation, over 11%, which is kind of unheard of when you have cities like Austin and Denver and other places like that. We were the highest rent growth. And you're starting to see in some of these areas of the Denvers and Austin. I read an article this morning that Austin and Texas as a whole and Florida as a whole are starting to contract. And they are beginning to actually get some vacancy in their market, and they're beginning to see their rents drop. And that's not the case here in the Midwest. So we think we have a great opportunity here, and the opportunity can only be realized if you're dealing with the right people and relationships, as David mentioned. They've spent a lot of time vetting both the market and the relationships. They've met all of these people. They've learned a lot about them, and they've checked them out. Now, I'm fortunate. I've been in the real estate business 47 years, so I've seen a little bit of everything in the marketplace, and we've been involved in a lot of things. But my business partner and I, Ron, we began about 4 or 5 years ago starting to invest in apartment development. And we started that process by working with a group called LDG, Mark Lechner, Chris Dishinger. Now, I've known Mark and Chris for about 30 to 35 years, so a long history with them. And they started out in the house market, and then they evolved into the largest affordable housing developer in the nation and one of the largest conventional developers in the nation. And they were very smart. They aligned themselves up with Sam Ray. Sam is one of the favorite people I know in this world. He is a very smart young man, and his smart started about 15 years ago when he met a young lady that is my business partner's daughter. And she's like a niece to me. And Sam married her and has a beautiful family. And he's a graduate of Purdue University with a construction management degree, which really serves him well as he entered into the real estate market full time. So as they're doing these developments, Sam understands what they're building. And it was fun. I took a tour the other day of one of their developments, and Sam understood every nail and every board that was going up and knew what was going on. So we're very fortunate to have Sam Ray representing LDG today, and Sam's going to be one of those guys that will also be a contact person for you in the future, because he's helping LDG with their client relations side of it and in setting up investment portals and so forth. So Sam is a great guy to work with, and you'll enjoy hearing about the LDG opportunities.
Perfect. Thanks, Larry. Much appreciated. That was a great intro. I wasn't expecting all that. You took some of my job and did it for me, but appreciate you guys having me on here today. As Larry mentioned, I came up through the construction industry and got started in real estate a little over 3 years ago, and it was a fairly easy conversion for me with the construction background that I had and the experience that I had there to just come over and apply that more towards the real estate investing type thing. So partnered with my father-in-law now at R.J. Bowden Companies. Again, like Larry, Ron has been around real estate for over 40 years, and again, have known Mark and Chris at LDG for a long time. Ron's a part of the SEC group that they mentioned earlier, and those guys are some of the most creative guys in the real estate industry with, LDG and Mark and Chris and those guys. So I really have enjoyed learning from them. One of the things that we've done at RJ Bowden Companies is we're the face of LDG in the market from an investment standpoint. LDG has over 28,000 units in the United States, primarily in Texas and Indiana and Kentucky. Larry did a great job talking about the Indiana side of things. Louisville is a very strong market as well, very close, just an hour and a half south of Indianapolis. It's one of the many markets that we do apartments in. I mentioned Texas. We've got some in Florida and Alabama and Georgia. So we're expanding out to other areas, but Louisville is just really the heart of who LDG is as a company. They really care for the community. They have a lot of great things going with the government there. We've partnered with the Bezos Foundation here lately to build some schools for pre-elementary school kids to attend free of charge. Louisville is one of those markets. It has the second largest UPS hub in the world. FedEx is just up the road in Indianapolis, like Larry mentioned. Again, some of the positives there are the payroll, steady job growth that we see with these blue collar workers, and that gives a super stable rent growth. If you look back at the last 30 or 40 years of history of the Midwest of Indiana and Kentucky and Ohio, they average over 3% of rent growth on average, with very few dips where, Texas and some of these areas are starting to dip. It's very stable here, and we have that consistent rent growth over time. So that's why we like it. But we do look at other opportunities. We've got a full in-house team of acquisition specialists. We've got an in-house design team, in-house construction managers that helps us with our loan to value opportunities, which in turn helps the investors when you have your own construction management company in-house. And they do a lot of work with the affordable housing side of things. And so because of that, they have a lot of great relationships with different banks, with HUD lenders, different types of life insurance companies. And so we have a whole plethora of opportunities when it comes to debt as well. As everybody knows, debt right now is a major key to being able to make a deal work or not. And having multiple opportunities and relationships with those banks really just puts us well in front of other developers who may have only been developing for the last couple of years, and they can look at our track record and the past deals we've done with them and how we've performed and give us preferential treatment in terms of looking at our deals before they look at other people's deals. So it really is a leg up with the size of company that LDG has grown to be over the last 25, 30 years. So that's just a little bit about Kentucky, who we are, what we do. Again, we're the face. We manage all the client investor relations through my equity portal software. So investors will have access to all of their different deals. They'll have access to their returns, how much they have invested. And so we get reports straight from our property management company that we upload into there. So you're very informed from that aspect as well. So I'd like to talk a little bit about one of the past deals that we have. We've got some currently, and I will mention, just for the sake of everyone on here, you know, when you're talking about investments for your peace of mind, we do operate under the Security and Exchange Commission rules. So we've got a good team of lawyers that have helped us with the paperwork there to make sure we're checking all the boxes and dotting our I's and crossing our T's. So I can't unfortunately get on a webinar like this and talk about any current deals we have, because we file a 506B offering, which does not allow us to advertise without having a pre-existing relationship with an investor. So here at the end, you'll have my contact information. If you want to reach out, we can have a conversation, get to know each other, and then we can kind of move down towards what we have in the hopper now. So that's why I'm going to talk about a success story here that is very similar to the other deals that we have going and that we've done in the past. So this is probably one of my favorite projects. I like the area that it's in. It's very hilly and country. It was built in an area that there weren't a lot of apartment complexes at the time, so we kind of had a leg up on the market. We did our first phase of 264 units that we completed in 2021, and we actually had owned the land next door to the east. And the plan was to do some affordable housing units on there, but we leased up phase one through COVID far beyond our expectations, even during COVID. I think thought we'd average 5 to 7 units per week that we'd lease, and I think we averaged well over 11. So we decided to do a second phase and bring the entire project to 400 total units. Then we just completed that second phase here in the last this past year. So just a basic overview of how our structure works, especially during a development process. You accrue a pref during construction, and that's typical of everything because there's no cash flow out of the deals. When we do a refinance from our construction loan to our permanent loan, that's when we catch up all that pref. So if our construction period is 24 to 30 months, you would have accrued a return over that point, and we would pay you that first out of our proceeds from a refinance. That's another huge advantage of development, is where you're going from a cost or a wholesale cost to a market value. And so Larry talked last time about a project that they partnered with Denton Floyd on, where they built it for $32 million, and then we sold it this past year for $54 million. So, you know, that's the kind of jump that you get in market value, and it's pretty typical with our deals. And again, there are some opportunities from a tax depreciation standpoint to offset income that we work with as well from a cost segregation standpoint. So that's ultimately why we decided to do this. You can go to the next slide. You can hit the next one. Oh, I guess there was one that was missing. No worries. I'll just talk a little bit about returns and expectations and where we were with this Avoca deal. Again, like I mentioned, we leased it up far faster than we thought. The rents were higher than what we thought we were going to get. We're super conservative with our underwriting team and with our debt, just to make sure that we can underpromise and overperform on these deals. So I think because we're still in the deal, we're still continuing. We haven't gotten to an IRR, which is the full return that you get over the full life of an investment opportunity. So what we did was we reinvested our proceeds out of phase one and just rolled that right over into phase two. So we have all of our capital out of phase one, and it's leased up to about 96% or so on average here. Phase two, just being completed earlier this year, is about at 60% and is leasing up pretty well. So we've got cash flow coming in off of phase one, and we have no money in the deal. We've rolled all that into phase two. Again, it's one project, but most of the cash flow is coming from phase one. You could look at this as an opportunity to roll from one deal into the next deal as you get your capital back, and then you keep the ownership and just hold for cash flow, which is primarily what we focus on. Although, like Larry mentioned last time, we will sell a property if we get an unsolicited offer that just makes sense for all of our investors. The management company that we've created to manage these different opportunities as they come up is RDI Management, and it stands for Relationship Driven Investors. And I really want to drive home to everybody that we named it that because we really care about and want to make sure that our investors, because they're the most important thing to us, are have access to anything that they may need at any time, access to the principals. If you need to get on the phone with myself or Ron or Larry, we're readily available. Like I mentioned, we have the portal that we use so that everything is up front. And then we want to create that personal relationship with you and understand who you are and who your family is, what your values are, and what your goals are for your investment strategy, so that we can get you in on the right project at the right time and give you, hopefully well above and beyond the returns that you guys would be expecting out of an investment like this. We typically shoot for about 18 to 22% returns. And I can tell you, out of the deals that we've exited out of and the ones that we're projecting, we're at or far beyond those returns. Again, nothing that we do is guaranteed, as everybody knows, but just, I really feel that with the LDG team that we have in place from a development standpoint, and with Larry and the guys here, that, we've got a huge opportunity in the market out there, in that gap that Larry mentioned earlier, to really come in the Midwest and in some parts of the South and Southeast to provide housing to people who need it, both on the affordable side and the market side. So I appreciate you guys coming in today and allowing me to talk for a little bit. I could probably talk for another half hour, probably like most of the guys here, but I know we've got others who want to talk. So if you guys have any questions for me, feel free to put them in the chat, or if you stick back on that slide prior to this, you go back to the prior slide. I've got a little QR code here. If you've got your camera, just get it out, take a picture of it, scan it. It'll come up. It'll have all my contact information, website, LinkedIn, Instagram, all of this. Any way you would want to get in contact with me is on there. So I appreciate it, guys. And if we have any questions, I'll go ahead and take any from that standpoint.
And Rod, how are we doing for time? I know I talked a little bit too long at the beginning, but do we have time for questions right now?
Yeah, we do. I don't, we can move on to the next, because like we did last time, maybe the questions will accumulate for both sessions. We'll have time at the end to handle both Sam and Justin, if anybody has any other question. I mean, one really quick one for you, Sam. The 22%, just elaborate, was that an IRR? Was that per year? Was that overall?
Yeah, so that's an IRR. So that's the total hold over the entire project. We typically see on a cash value, once we do the refinance on your return, once we do the refinance and give you a portion of your capital back, our cash on cash returns, which is the cash flow you're getting, are typically in the mid-teens. And then once we go to sell the property, like we mentioned in the Jeffersonville Common ones last time, you've got that $32 million to $54 million bump that you get when you sell. And it's not quite that much because we've done a refinance, but you'll get a big chunk of change when you sell that just sits out there as like the 20% down payment that you typically would have when you do any sort of mortgage on it. So when you get all that back and you look at the last 5-7 years, however long it's been, that's where you get to that 22 to 24% IRR total. So you get some good cash flow while you're in it. But
yeah, and maybe just speak to timeframes as well, like the typical investment duration, length of time, et cetera.
Yeah, it's a great question. I forgot to mention that. We like to do long-term holds, like I mentioned, but our goal is to get the investor capital back to them within 5 to 7 years via refinances based upon increases in rents and market conditions. That sort of thing is typically what we've been able to do. Typically, the refinance from construction to perm financing, you'll get 50 to 65% of your capital back, and that's where your cash on cash returns really shoot up. And then whatever money you have left in the deal, we'll try to refinance out at a later time. And then you have no money in the deal. You've got cash flow coming in off your ownership. Your return is infinity at that point, and you've got that cash to go into another deal or go do something else with. And so if we hold them for longer than that, that's what we'll do.
All right, Dave, we can push on. We'll come back, Sam. We may need you for some other questions if they come up. But thank you. Back over to you, Dave.
Yeah, thanks, Sam. That was awesome. And having been down to visit you guys a couple of times and putting my eyes to your projects, the completed projects, plus the under construction projects that are just coming to a certificate of occupancy. you know, really quality work. And yeah, I've seen some of the numbers. You know, your projections are conservative and the returns for the investors are very strong. So our audience, absolutely feel free to reach out to Sam, make an introduction, or come to me. I can make that connection into Sam, and you can talk about the potential opportunities coming up. So now I'm going to bring Larry Browning back in, because again, Larry, having been in the market in the area for so many years down there, and believe it or not, Larry's only 35 years old, but he's been in the industry for about 47. But anyway, he knows Justin Moffett very well, and I'm going to turn it back to Larry to introduce Justin.
Thank you, David. Just to mention quickly, the project that Sam just presented, both Sam, myself, and Ron Bowden both made major investments into that project, and we're receiving some very nice cash flow right now, and it's a real deal that's performing. Moving on to Justin Moffett, I would say approximately 10 years ago, my daughter lives up in the Carmel, Indiana area, and when I visited her, I began noticing some major changes occurring in Carmel and watching some major developments occur. And I was really impressed. Justin Moffat's company called Old Town were building homes in downtown Carmel that were blowing me away. Their designs were amazing. It looked like those homes were 50-year-old homes with all the modern amenities and beautiful designs and so forth. And I was taking note of Old Town, and then I realized my daughter was a close friend with the Moffats and introduced us. And so I got to watch the progression of Old Town and Justin Moffat over time, and I started observing that they moved from being home builders to being developers of mixed-use projects, apartment projects, and so forth. In fact, when they were putting some projects together, my partner Ron Bowden and I sat down with them, and we wanted to make investments into their projects. The project down on the bottom right was the project we tried to invest in. And unfortunately, we didn't get a chance because so much demand was to invest in that project that they had major companies making investment in that, and we missed out, unfortunately. Then they had a project going up in Westfield, Indiana. We tried to invest again, and they had major people come in and invest in it. So very high demand. And if you don't know anything about Carmel, Indiana, the unique thing about Carmel is just kind of the best market basically in Indiana. Carmel, if you look at almost any rating service, will show it as one of the top 2 or 3 safest cities in America, one of the 2 or 3 top wealthiest cities in America, and you'll see it top 2 or 3 best places to live in America. And so they've had a very progressive mayor for a number of years. He's quite a visionary, and the things they've done in Carmel will blow you away. David and Rod can tell you very clearly, they visited Carmel and they had no idea this gym existed. And to be honest, the mayor aligned with top-notch developers to carry this out, and Justin Moffat being the top. Justin is still a young man, and yet he's one of the, just like Sam, one of the brightest young minds that I've seen in the marketplace, but he has a unique ability of design also. So his projects are beautiful, and just kind of like what Sam mentioned, he also is very conservative in the way he presents his projects. So he'll definitely underpromise what he delivers. His projects come in way above his projections and always do. And you're proud to be involved with their developments because they produce gorgeous designs and they get top market rents, and their projects fill up quickly and they know how to manage them. So I want to introduce you to Justin Moffat, one of the 2 partners and owners of Old Town Companies.
Thank you, Larry. Really appreciate the opportunity to participate today. And if you'll forgive me, I'm getting over a cold, so voice is a little froggy here. But Larry did a good segue into Carmel, Indiana. And I've got to be honest that I just grew up in the right place at the right time. I grew up in the downtown of my community, and we were the lower middle class income wise. I was a poor kid, and as I got interested in the building business and the development aspect of it, I realized that there was probably no better place to start than in my hometown, in our downtown that was starting to experience a renaissance. And I had no idea that I'd find myself 15 years later being the CEO of a company that really had a major stake in the transformation of my own community. So I'm really proud of that work. Beyond that, I'm proud of the team we've created. We are a really diverse organization here at Old Town. Started as a home builder and has expanded beyond into commercial real estate business. We do anything from Class A office to multifamily. You'll see a tagline here on the image that says creating communities where people flourish. And that really is the DNA of our organization. Again, knowing that I set out to help improve my community and put food on the table for my family, it all came down to serving community, and community can mean a lot of things. It can be, obviously my investor partners, but it's also my broader community geographically, but it's the community of employees that are really proud to show up and do the work alongside me. So really focusing on community and human flourishing is the DNA of our organization. I'm going to go backwards before I go forwards. So if you'll advance the next slide, I want to kind of tell you what our bread and butter has been. We actually started building cutesy little cottage homes in our downtown as we were getting established. And for the first 10 years we were in business, I don't think people realized how much of our revenue came from building large custom homes all over our market. We started in 2008, brilliant time in the midst of a recession to start a home building company. I joke about that, but I could write a book about it now and probably should. Because as a lot of our peers were struggling, we were launching a new brand, and we became the hot brand in our market, and really haven't lost a foothold in 15 years of being really the number one in the luxury housing space in central Indiana. Knowing that we had to build our own pipeline, we started simultaneous with our home building operations. We started a lot development company to put lots in the ground to serve our company and our growth. So we do traditional suburban custom home communities. This is just one example of the types of homes and communities we develop. But we also, knowing that we started in our downtown that has a traditional, we call it traditional neighborhood design with an urban grid pattern. My business very much was tear down rebuilds, infill lot development, in addition to this suburban type home construction. If you'll advance the next slide. What we found though was that our product really resonated with the market, and there wasn't enough opportunity just in our downtown to sustain a business. So we started looking at taking that concept of traditional neighborhood design and expanding it into doing our own master plan communities throughout central Indiana. And so that's really our trademark right now in Indiana, known for creative municipal partnerships and visioning placemaking type communities that serve every aspect of our business, which includes now home building, lot development, and then multifamily development as well. And so we frequently are creating our own housing communities that include for sale and for rent development. If you'll advance forward for me. I'm gonna show you an example of a transformation that we led here in our community starting in around 2016. And this is really was a career transformation moment for me. Having started the business in 2008, one of our early objectives was to get into investment real estate. I mentioned how proud we are of the quality of team that we've created here at Old Town. But we know that the housing business is cyclical, and we wanted to diversify our revenue streams beyond just for sale residential. And so we actually in 2014 did our first multifamily deal, constructed it, built it, sold it. I'll show you an example of return that we achieved on that one. But but it really taught us, how to engage with the multifamily investment space. And then we kind of shot for the moon with our next project here. In the heart of our downtown, we had really a brownfield, an older industrial area, in otherwise beautiful downtown. And if you'll advance the next slide for me. This is what it looks like today, just a couple years later. It's one of the most dynamic placemaking initiatives in our state. Urban Land Institute celebrates it as an example of quality placemaking. I give tours of it about every quarter. There's a group coming from around North America to check this out and learn lessons learned, pros and cons. I mean, certainly some mistakes that we've made, but it has been an enormous financial success. And Midtown Carmel is a neighborhood that candidly I just invented. It was a brownfield, and I said, let's turn it into a place. And it's one of the most diverse, ethnically diverse places in our community. Random weekday afternoon. It's a place where people come gather, enjoy life. It's a live, work, play community that's anchored on a former rail yard. And Carmel has a lot of rail trail programs. That's kind of our alternative transportation pedestrian network. So this is an example of the type of work that Old Town does, and has really put us on the map regionally. Most of the work we do at this stage is at the invitation of other municipalities who seek us out to help them re-envision how to develop their communities. If you'll advance forward for me here. I know you're not supposed to put a lot of text on presentations, but wanted to just cover the top line points. If you care to read along, you're welcome to. But really, because of the way we operate in the community, we have over years built strong relationships with local government. We are not a regional developer builder. We really stick to Central Indiana. We're frequently invited outside of that geography. But we're kind of a big fish in a small pond, and we found that works well for us. And it had helps our pipeline. Again, I mentioned we get invited into a lot of projects, but we have also mastered incentive strategies. We use a lot of tax increment financing for our projects, and frequently communities contribute land to our deals to help encourage us to start projects. We are turnkey in that we started really as a construction company from the beginning 15 years ago. So under one roof, we do everything from design planning and entitlements and through construction and then operations. So everything's under one roof, which really helps us with cost management, cost projecting, so that when we go to start a project, we have buyout complete and we are able to achieve our pro forma budget. My finance team has learned to diversify in this unique market. We have played to some extent in the tax credit space. So we've learned about some of the unique financing opportunities. One I'll mention as an example would be Freddie Mac forward commitment loan structure. I closed a project at the end of 21 that had a 4.8% 35-year AM with a 15-year lock. Some of my peers thought that was a stretch at the time. I was paying too much interest, but I feel brilliant now having locked a 4.8. So my team kind of was ahead of the curve with looking at unique loan structures out there to ride this wave that we're all in. And we continue to do that using some creative federally backed loan programs that help us kind of fix our interest in rate risk there. The reality is, I kind of finished with this on the slide here, the deep Midwest roots. We really know our market well. I think we have the strongest sense of all aspects of housing in Central Indiana within our team. All disciplines work within Old Town, from for sale to for rent, and we really are solid at research and development, understanding market trends, and really executing well. If you'll advance forward here for me, I'm going to show you a few sample deals, just give you a sense of some of the past success stories. we don't round trip a whole lot of deals as far as the goal is to build, execute well on the financing, look for unique opportunities for refis, pay down our equity, and then do long-term holds. So most properties you'll find that we hold long-term. We build legacy quality, and that would be another factor I'd want people to understand about Old Town. Municipalities seek us out because we are not what frequently is termed a merchant developer model, which sometimes there's some risk in that, you're always chasing the exit, and sometimes builders will diminish overall product quality to juice return. Return is important. My investors are very important to me. I have one family office in Central Indiana. It's been with me since I started. But the reality is we build things as if we're going to own them forever. And that creates, I could defend that as an economic strategy, even if we do want to exit. And we have found that investors that are buying our assets see them as so high quality, they're willing to pay a premium for them. And I can show some evidence of that. But the reality is when we build for long term, the communities notice and they invite us to more deals because they see the quality of what Old Town puts in the ground. This was a project we built and sold, and you can see the metrics here on the screen. And typically we're modeling hyper conservative, as Larry said. I got to shoot straight with everybody and say that I don't think we've ever shared an investor pro forma that said we'd achieve higher than a 15% IRR when we closed financing, and we've never closed a sale without being in the 20s plus. So we tend to model in a way we call it good, better, best. We close financing with good, and then we work tirelessly as a team to make sure we manage cost control, use dynamic pricing to push rents and really grow the asset value to achieve a higher IRR in the end. If you'll advance the next slide for me. This was a project that has not closed yet, but it's under purchase agreement. It closes in about 60 days. This one was kind of right place, right time with our construction cost and eventual exit here. So this acknowledges that we're under contract for this price. This is in West Lafayette, Indiana, still kind of the central Indiana region. This is adjacent to Purdue University. But we, again, as rents were experiencing our really first hyper growth in Indiana history, we caught the wave there, which pushed our projected closing IRR to the 30s. I would not sit here and look at y'all and represent this as the norm, but the other deal that I showed previously is the norm for us. But these home runs do exist. They just really happen to come by us searching out phenomenal locations and really having the discipline to on the economic side to manage well and execute strategy based on the market circumstances that come at us that we all know we experience. It's all about managing well, so when the right refinancing opportunities are there, that we capitalize upon them. If you'll advance for me, next slide. This slide's interesting to me in that similar to our friends in Canada, housing costs are extremely high. There's a variable though that we all face, and that's construction costs have increased and interest rates are higher than what we've experienced previously in a lot of our careers. But there's a uniqueness to the Indy market in that our rent to income ratios are some of the lowest in the nation. And so the differentiator there for us is that we have a lot of capacity for rent growth in our little submarket here. Larry did a great job of introing this at the beginning of the call, but Indiana is experiencing phenomenal growth. It's seen as a politically safe place to invest. It's a traffic crossroads. So it's really a distribution hub and crossroads for the Midwest of the United States. So we're just experiencing explosive corporate investment in Hamilton County, Indiana, which is the north suburb of Indianapolis, and Carmel, Westfield, Noblesville, Fishers, Zionsville. Those are the dynamic towns that make up the north suburbs, and we really have a foothold in each of those communities. I believe there's a next slide here. This is kind of a stat most of us in the real estate space are familiar with, that just talks about the housing shortage in the United States. So this is specific to the whole U.S., but the story in Hamilton County, Indiana is no different. We have a gross undersupply of housing. The band there showing the apartment shortage, being a small percentage of the overall housing shortage as compared to the for sale housing supply. The differentiator I want to point to our market is that because of the high incomes in Hamilton County, Indiana, and the extreme jobs growth we've experienced has made that gap even wider. It's really challenging to buy for sale residential here. The prices have gone up significantly, and there's just really no inventory. And so unfortunately for the human condition, it makes it challenging for young professionals and first-time home buyers to be able to afford housing. But the reality is, on the multifamily space, that it's made demand even higher. And that's really ties directly to that rent growth story that Larry mentioned earlier, that Indianapolis has experienced the highest rent growth in North America this last year. And our submarket, if you boil it down, again, highest in North America and Indy, and our market is the highest of Indy. So we really are kind of in the bullseye of where we've experienced extremely high rent growth. Next slide, please. Just to give you an example of the kind of projects that are in the works. So I'll give you some examples previously of deals we've round tripped. These are under construction. We are not taking investment on these. The one on the left is North End Carmel. It's a mixed residential community with for sale and for rent product. We actually moved our corporate headquarters into the main level of that building here in this image on the top left, and kind of in the heart of our community here. On the right is Noblesville, Indiana. The city leaders of that community, the mayor actually approached me about 4 years ago and asked if we would partner with them on a Renaissance project for their downtown. So you can see their farmers market in the foreground here of this image. That's real. We really focus on outstanding locations in our site selection and plant our projects in the hub of community investment. So just off the screen to the right of this image is the community amphitheater, where they have all the concert series. And so that's really the hallmark of our strategy, is anchoring our projects in walkable downtowns and building Class A construction. Both of these projects had significant municipal incentives, both in land contribution and tax increment financing. And the project on the right, in addition to our TIF bonds, the city did an additional $9 million with us in helping fund a parking structure. Next slide. This one is in Westfield, Indiana, another north suburb of Indianapolis. This is also under construction. Similar story with being a placemaking initiative. Just off the screen here to the south, we partner with the city and help them design and plan a $50 million downtown park that our project anchors. So the center of Westfield's kind of community activities happen immediately adjacent to our site. Our project and our rooftop pool looks down at this new $50 million park. There's an image on the left here that says Sun King Food Hall. There's an Indiana brewery that we partnered with multiple times to bring food and beverage to our developments. That's kind of work that we do adjacent to our multifamily, but we find that adding those cultural elements really helps our revenue. They really help people, help our rents. People want to live near those sort of projects. I've said a lot, and I appreciate your patience with me talking to you about all the diversity of what Old Town brings to the market. But similar to Sam, we very much value our investor partnerships. We work very hard to honor those commitments that we've made to execute well upon our promises. So if there's interest, we'd really enjoy further conversation from our Canadian friends. And I'd welcome you to look us up, do your own research, find out about Carmel, Indiana, find out about Old Town. I think you'd be really impressed with what you read online.
All right, Justin, thank you. It's an interesting point, right? As a Canadian, you talk to anybody out on the streets or in conversations, and not a lot of people up here know about Indiana and Kentucky. And, obviously we know the states, we know about the Hoosiers, we know about NCAA basketball and all of that, but we really don't know anything about the market. And that's why, and I'm really excited here because we do believe that we here at SVN Rock have uncovered a gap, and it's not because we are geniuses up here. This is about leveraging our relationships. We wouldn't know Larry if it wasn't for a connection that was made through the SEC. And this is about good quality, smart people that are introducing like-minded individuals. Then we met Larry, got to know him very well, and he actually took us in like family and introduced us to the likes of Sam Ray and Justin Moffett. And everybody treats us the same down in Indiana and Kentucky. It's like, because of our connections and our relationships, they take us in like family. They take us on tours, show us what they've done, and really give us an opportunity to know their projects and how they operate. And you'll notice a lot of similarities between Sam and Justin in terms of how they operate and what they care about. And they control their processes, and they have great relationships with the local government and with the local financiers. And that's critical. As Canadians, it's tough to get access to the affordable programs and the preferred financing. You heard Sam talk about HUD loans. You heard Justin talk about the Freddie Mac loans. These are creative loan solutions that offer better financing terms and better financing rates. These guys get preferential treatment because of the quality of who they are, how they develop, and they focus on the community. So this really helps their projects pencil out extremely well, and how they're able to exceed their conservative projections. So, thank you, Rod. Again, just as a reminder, right, in terms of our process, we identify gaps in the market, right? And we are so fortunate to have found this gap in Indiana and Kentucky. We believe in our developer friends that we've met and know and understand. And we rely on our feet on the ground. Larry Browning, he knows the market better than anybody, and he has the relationships over the long haul with Justin and Sam, and then we come down and we look at it. They tour us around. We look at the market. We look at the underlying metrics, the macro and microeconomics. We look at the developments, past successes, and projections into the future. And we vet those opportunities, and we vet the developers. So here we are today. We're doing a feature spotlight because we're excited to share these opportunities with our Canadian audience, right? SVN Rock as the relationship people and solutions providers, and we're always looking for the gap. So we really thank Larry for helping us to identify the gap in his backyard. And anybody that wants to rewatch this recording, remember I said we post these recordings up on our website. You can check out our last recording from October, where you saw 2 other developers in their deals. But svnrock.ca, Unleashing U.S. Real Estate. Later on, you'll be able to rewatch this. And if you have any questions whatsoever, again, our role here is about playing the connector, bringing the opportunity to the investors that are looking for great opportunities to diversify. Diversification is critical. That could be done through geographies. That can be done in different projects in different parts of North America. That's what we're all about. So contact me. You see my cell phone number there, my email address. Contact Justin directly, contact Sam directly. We've had this happening throughout the webinar. People are they're reaching out to Larry, and continue to do so, right? This is about putting smart people together to make things happen. And these are great opportunities. And I'll just remind you, that we're taking a pause through the holiday season coming up in December, but we're going to be running the next version of unleashing U.S. real estate opportunities for Canadians on Thursday, January 25th. Same time, 11 a.m. to create some consistency there. And please don't hesitate to reach out to any one of us on this panel. All right.
Thanks for including us.
Oh, absolutely. So
thanks, Dave, and thanks to the whole team, Justin, Larry, Sam, Dave, thanks for hosting us today. I know, as you mentioned, Dave, we did have some questions that they're going to be handled one-to-one, as we did. And again, connect with Dave if you have any questions. Have a great day, and we'll see you all back in January when we come back with Unleashing again. Thanks again, gentlemen.